Hey guys, welcome to today's premium newsletter for February 22nd. So with the market continuing to take marginal losses, it's important to keep perspective in mind. As the market is currently in the mid 430s, it's almost exactly between the monthly high of 596 billion and the monthly low of 279 billion. That should tell you exactly how indecisive the market is. And as I've said multiple times now, a big piece of that is the lack of volume in the market right now. The good part about this is that the largest coins are holding on to most of the gains they've made, with the price action near the vital support zones giving us encouragement. Quite obviously, the overall correction is not over yet, and it's likely further losses are on the way, but without considerable change in price action, we'll eventually see a return to the rally started last week. One of the most interesting developments I've seen this week was the launch of the pre-sale of the Petro, the Venezuelan government-issued cryptocurrency. So what's going on here, and why should you avoid this like the plague? So a little backstory on Venezuela for those out of the know. They've had a huge deficit in USD monetary supply, which has led to hyperinflation, absence of basic goods, and a huge price discrepancy between official and black market currency exchanges. Part of what's driving this are US sanctions, which have been further increased under the Trump administration, in response to dictatorial practices by the country's president, Nicolas Maduro. Needless to say, the country is at the threshold of financial collapse. One possible relief could come in the form of Venezuela's massive oil reserves. As assessed by OPEC, Venezuela possesses the largest known volume of readily retrievable proved oil, ahead of Saudi Arabia, Kuwait, and many others. So this brings us to the Petro, Nicolas Maduro's attempt to raise capital to keep the failing government afloat. Maduro claims that the Petro is backed by oil, gas, diamonds, and gold, commodities. However, no details were revealed as to how the Petro currency will work, which is important when considering an investment. Despite this, Maduro has heavily touted the success of the coin so far after the pre-sale went online on Tuesday. In the 2 days, it supposedly raised 735 million in the pre-sale alone, according to him. And that last part is what's most important. If you actually go to the website they're selling this on, endure a myriad of technical errors, and click the buy button, nothing happens. Despite this, the Petro team is claiming they've raised enough money to put them within the top 3 valuations of initial coin offerings ever. Something clearly isn't adding up. Thanks to the nature of the blockchain, the network for transferring Petro allows anyone to see the full record of transactions. And there have been 0. All Petros are controlled by one address. So that's the takeaway here. If you're considering investing in a centralized coin backed by a dictatorial regime, don't. If you see a number being advertised, such as the amount raised for an ICO, question it. The beauty of the blockchain is that everyone can see everything, so you can refute something because code is more absolute than word. Finally, understand what you're investing in and where the motivations are. Even if the Petro goes on to make money, which I seriously doubt that it will, it's doing so off the backs of a struggling economy and an exploited group of people. It goes without saying that there's other ways to make money that don't involve supporting dictators. So if you weren't aware, we've opened the doors to our Telegram channel, and as a premium member, you have free access. We'll share exclusive announcements, analysis, and our portfolio actions, so it's the best way to be in the know with us. So with that, I'll turn it over to Doc. Talk to you this weekend.
Hey folks, it's Doc for ReadySetCrypto. I am not going to torture you tonight with a full top 10 because just about everything across the board is still leaking lower. Even the recent Rockstar Litecoin is down for the 3rd day in a row. The day just ticked over about an hour ago, so far we are down 3 days in a row, 1 hour into the new day, which is Friday. What I want to show here is a technique that I use for determining how to frame in the price action. Remember, I do not know where this is going to go tomorrow, the day after that. I have no projections, I have no crystal ball, I have no forecasting that says that I believe the price will be X by this certain date. I believe all that is absolutely no good. Why? Because price can do whatever it wants to do and frequently does. What I find best to do is to frame in the price action so I can make a decision in terms of what it's telling me. So this is actually a huge point. I really do not believe in forward-looking, some would call it fortune-telling, when it comes to technical analysis. That is not what it's meant to do. What it's meant to do is to analyze what it's showing right now and see if we can identify patterns and or price levels that we can make decisions based on. So an example of that is this whole notion of confluence that I talked about the other day. One of these being the fibs. The fib retracements here at 38.2. Very typically, we will see the price after a strong rally, especially when it comes up to a trend line, and especially when it's made more than a 2 standard deviation move off of the lower Bollinger Band to find resistance at a certain level. So this is what it was supposed to do, and that's exactly what it did do. It had a very high probability of doing that. So that, again, is not predicting the future. This is simply showing a certain probability that when you put all those odds together, that we should expect a certain result. So now that we used this fib series, this fib retracement series from the highs to the lows to determine a place where this could find resistance, okay, so what we're going to do is we're going to get rid of that. We're going to uncheck this and remove that. And now what I'm going to do is I'm going to increase the vertical scale here and see if I can move this around a little bit. I'm going to bring this up so I can get just a little bit more room and really expand the vertical scale. Now what I want to look for is places where the price may bounce on the way back down again. And so what I'm going to do is pull out the fib retracements and take these from the bottom up to the top again, from the very bottom to the very top. And you can see that right now the price is coming down to the 38.2 retracement. This is really about the only time that I use fibs. I don't typically use fibs for anything more than trying to find a logical place where we might see a reaction from this. Again, here's the 38.2, here's the 50%. I have to always say that this is not technically a fib retracement because I've been corrected so many times in the past from those that care. And here is the 61.8% retracement, which is down here at about 81.42-ish, right? So that's about 9,500. So 9,500, we're going to watch that. And we're going to watch this level here, which is 88.22, because I do watch the 50%. Quite often we see a reaction there. And then here's kind of the last line of defense for the bull. So in other words, if the price goes all the way down to here, I want to see a bounce from here. Otherwise, we're going to fill in the triangle. The probabilities have increased that we're going to fill in the triangle if the price cuts below 81.42. Now, I'll tell you what I would love to see here. Again, this goes back to what we were talking about the bear market back here in January, February timeframe, is capitulation. I want to see capitulation. We didn't really get it here. We did get a nice volume spike out of this bottom, but we didn't really get what I would call true capitulation. And that starts with just identifying the price action. So in other words, if we get something like this, let's say we got a candlestick that showed up like this, the price gets down to the 61.8 retracement, and then it undercuts that and scares everybody to death, and maybe even comes all the way down to this trend line again. And then by the end of the day, it closes back up above that 61.8% retracement. That's what I'm looking for. That would be good, because what this is going to do is just force everybody to say, look, I give up. This whole crypto thing is a fad. It's never going to take off. I give up. I'm never going to look at this again. Good. See you later. Don't let the door hit you on the way out. These are the types of investors that need to be shaken out of the market, because once these weak hands are shaken out, we will see this thing go lift off on the slightest catalyst. So again, watch these levels for right now. 9,500, 88.20 or so. I can't really read that number. 88.22 maybe. And then 81.42. Watch those numbers like a hawk. But watch those rough levels for right now. Watch for a bounce to see if we can get a bounce at one of those. This would be better to do so at 38.2. But if I have to, I'll take that capitulation candle all the way down there. Let's let it bleed, and let's let this market recover. That is it for today's report. Thanks for listening. We'll see you over the weekend, folks. Take care.